Hello and welcome to the channel. So in today's video we'll be going through my Vanguard ISA portfolio. We'll be going through firstly what funds I've picked, why I've picked those funds, and what the current value is since I invested. So I'll give you a bit of context. My Vanguard portfolio is mainly my core portfolio, hence why it's been invested in an ISA to keep things tax efficient. The three funds that I've invested in are one, the FTSE Global All Cap Index Tracker Fund. The second is the Life Strategy Fund, 100%. The third is the US Equity Fund. And the reason why I've invested in these funds is because, firstly, the FTSE Global All Cap Fund tracks the whole market, so it's a global fund. However, there are some funds which I was really interested in, which are in the Life Strategy Fund. And I know I've probably overweighted and I've duplicated some of the funds. However, I really was interested in some of the funds that were in the Life Strategy 100 fund, which entailed, for example, the developed world, the S&P 500, and various other types of funds that I was interested in. And I thought, rather than buying them individually, I'd rather just buy the whole sort of fund, since it's the fund of funds. Hence why I've decided to invest in that. And also another reason why I've invested in that is because it's a higher weightage towards the UK. Now, in my investing portfolio and a lot of the index funds that I've invested in, I've not really invested in much of the UK funds or stocks either. Most of my index funds have been mainly US based, so that's one of the reasons why I've decided to tilt it towards UK a bit as well, get a bit of UK stocks in there as well, since it's a basket of shares that you are buying when you're buying these types of funds. So that's the reason why I've decided to buy in the Life Strategy 100. The reason why I've decided to invest in the US equity fund is because of the fact that rather than investing in the S&P 500, the US has more exposure to more companies because it has exposure to the small cap and mid cap, which you don't really get with the S&P 500. So that's why I decided to go with the US, the US equity index fund. You'll notice that all three funds that I've invested in are all accumulation, mainly because I do not have time to monitor the funds, so it's accumulating the dividends and it's reinvesting the dividends, and that it does it itself. It's mainly a set and forget. This is the first time I've actually logged in for actually recording this video, but usually I just, that's it. Since I've invested in these funds, I've not actually logged in all that much. So the way the breakdown of these funds are, I've invested split across three funds. So as you can see here, the Life Strategy 100, the FTSE Global, and the US Equity. Now I've got a bit of cash in here as well, and the reason why I've got a bit of cash is because of the fees. Because the way Vanguard work is they normally deduct the amount from the cash account, and if you do not have enough cash, what they then do is they sell your investments to pay the fees. So I didn't want them to do that here, hence why I've decided to leave a bit of money in cash. Another good thing about Vanguard that you don't get with many other platforms is that they do actually pay you interest on the cash on account. Now the interest is a measly amount; it's probably about 2%. You probably get more if you stuck your money in the bank, where you're getting 5% on average now. But that's a good thing, and the reason why I say it's a good thing is that you're getting something back. Now that 2% could go towards your fees, because I originally put in £500. They've been deducting their fees, but it's not really dropped in value all that much. It's still 500, but gradually, as I will be investing, it would start to reduce. This figure will start to reduce. So it's one of those over the long term. I didn't really want them to sell off my investments, hence why I decided to stick a bit of cash in there so they could pull their fees out of that. And I will be adding to these funds as well. So on average, the way I worked it would be around 33% each fund, but it's gone a bit all over the place at the moment because of the fact that some of them are in profit higher than the others. but overall it's good because all three funds are in the green, which is good. So they're going in the right direction. If you have a look at the performance here, it's on 10,500, and it's just been keep going up north. It hasn't really dropped all that much compared to the other sort of investments I've done previously. If we have a look at the monthly sort of basis, it's been mostly in the green. You've got the odd months where it's been in the red, but generally it's been in the green, which is a good sign. And yeah, it's going in the right direction. But as I mentioned, I'll be adding to this particular portfolio. This is my core portfolio, so I'll be adding heavily. The aim is to build this to 100,000. I'll be looking to add about 10k at the end of this year before the new tax year, and then on average add about 10k per year. But I think that's it for today. So if you have any questions or any comments to make, then please drop them in the comments below. Thank you very much.